to part 7 of our every stock in the S&P 500. Today we're going to be doing Tesla. As always, here's a disclaimer. Tesla, it is a electric vehicle company where we, I guess, look at how one car company is now larger than the entire auto industry. It's interesting. Let me just open this up so we can find the PE ratio. Car or auto parts, automotive. It's kind of automotive. It's not really realtor. Auto and truck. All right, PE ratio of 31.42. You'll get to in a minute why this is not my favorite company on a valuation basis. A lot of the company is based around, projections for the future for, SpaceX and robotics and those sorts of things. And that's not money that's coming in right now. So this is a growth company. This is not going to be the best valuation for balance sheet and cash flows. It's all hype. SEC.gov. Here it is. We'll go to the balance sheet. But who knows? Maybe I'll be proven wrong. All right, they have about $120 billion. But in some sense, the market cap of a company can be translated into actual cash. Like if they were to sell shares and dilute investors, not much goodwill. They did acquire Solar City. I think that might have been from like a friend or family member of Elon, though. And I think there's a really great investor, or short seller rather, Jim Chanos, who was wrong when he shorted it because he was going off of, fundamentals and valuation. He wasn't counting growth, and that's not a thing that you can really accurately predict future growth. This is why people build financial models and DCF models. But I think once we get to cash, it'll show up quite low. Here's the gross profit, net income. There we go. What is this for? 3 months and 9 months. All right, let's get the year. This one is what we want. Right here. 4.5 billion. And that was only 9 months. We need to grab the other here that they did, which is right here. Net income. Which is all right, about $7 billion. This is a lot smaller than a lot of the other companies that we've seen. And then industry will go automobiles. Vehicles. It's vehicles. Whether it's space travel, vehicles. All right. That's probably what we'd get from here. Oh yeah, they also have the Cybertrucks and other things. We got $91.50 a share. If we go to tip ranks, we'll probably get a very different answer. Some people are saying $24. Some people are saying $135. Other people, yeah, right here. Everyone is getting incredibly different answers because this is a growth company. It's not the best to be doing this type of valuation for. If you did want a different type of valuation, what you could do is you could go look at the company based on its revenue. So let's go over here to Google Finance. Google Finance, and then Tesla. And we could see a chart for its growth. You can see the revenue is increasing like a behemoth. I mean, it is slowing down a little bit from here to here, but that is still about $15 billion in growth. And even though they are making money now. For a long time, they were losing money, like 2019 here. Yeah, I mean, they're finally profitable, but they are wildly overvalued, in my opinion, because a lot of people think that this company, Elon also owns the Boring Company and Twitter, and many of these things are factored into the growth of those companies, which they haven't achieved yet. So if you're an actual value investor, this is not a stock that you would own. This is a growth portfolio. So I wouldn't buy this, but I'm not saying you cannot make money in it. It's just not a value stock. It's a growth stock. So, Kathy Wood, for instance, would buy it. And as always, here's a disclaimer. Please remember to do your own research and please like the video. Thanks for watching.